Hello everyone. In all the previous lectures, we've discussed financial planning and investing in theory. Today, I'm going to wrap up this series by talking about some practical aspects of investing. The day-to-day process of investing involves three things. First, gathering knowledge. Second, making sense of that knowledge to take a decision. And third, executing your investment decision. Let's talk about this in detail. Gathering knowledge. In today's connected world, there are abundant sources for gathering knowledge and information that is relevant to investing. The problem is, what information is relevant and important? Here's my list. News. The most basic and important source of knowledge for an investor is an economic daily newspaper, such as the Wall Street Journal in the US or the Economic Times in India. This serves to build one's general awareness as to what's happening in the economy. You can supplement this by setting news alerts specific to companies that you are tracking. This can be done on Google or on Reuters for free. Research. Research involves gathering specific information about a particular investment that you are evaluating or you've already invested in. There are various sources of research based on the type of investing that you are into. If you are investing directly in stocks, it's good to read a company's annual report and the investor presentations as a start. Most of these are available on the company's website in the investor relations section. Additional research on listed companies can be found on websites such as Bloomberg, Reuters, or Money Control in India. These websites give a lot of information such as price charts, important news, and analyst recommendations. If your stockbroker sends you research reports, these can serve as a good source of information on what is happening in a company. If you invest in mutual funds, you can refer to websites such as Morningstar or Value Research Online, which is a site for Indian mutual funds. These websites provide a detailed analysis on the performance of mutual funds across categories and help you make an informed choice. When it comes to real estate, there is no substitute for on-the-ground research such as visiting the property, talking to people in the neighborhood, etc. However, you can begin your research by going through some websites that list properties for sale and rent. Some such sites in India are Magic Bricks and 99 Acres. For US properties, Yahoo Real Estate can be a starting point. Making sense of information. Making sense of the information gathered to take an informed decision is the most critical stage of investing. As Robert Kiyosaki puts it, investing is a team sport. At this stage of the investment process, you will need a team to help you make a good investment decision. Here are some of the people that you need on your team. A mentor or a coach. A mentor or a coach is someone who is better than you at investing and who you can consult when needed. This role need not be a formal one, and a friend or a family member can very well fit into this role. Brokers. Brokers are people who act on your behalf in a market to buy and sell investments. Since most investments can be purchased online these days, a lot of people choose to cut out brokers from their team. In my view, a good broker is much more valuable on your team than the commission that you pay him. A good broker has on-the-street knowledge about an investment, something that you can rarely gather from other sources. The different brokers that you need are stockbrokers for direct investment in equities and listed bonds, insurance and mutual fund advisors for buying those products, and real estate brokers for buying and selling real estate. Please take pain to find a good broker and also to understand what to expect from your broker. A tax consultant or a lawyer. A tax consultant is another critical member of your team. Since it is easy to file your tax returns online these days, a lot of people do not appoint tax consultants. The key reason for having a tax consultant on your team is not for filing tax returns, but to help you plan your investments in such a way that you are able to take advantage of all available tax breaks. If you get your taxes wrong, you can lose all gains made on investing. A lawyer is important for a couple of reasons. Firstly, if you invest in real estate regularly, you need someone who can check the papers thoroughly. Also, you need a lawyer for things like estate planning, making a will, things on those lines. If you are able to build a good investment team, you will be able to take your investment decisions better. But do keep in mind that all these team members are experts in their own domains. The ultimate investment decision is yours and yours alone. Executing your investment decisions. Once you've decided to invest, the obvious question is how? Let me give you a brief overview on what are the different ways to invest. This applies only to India, so if you're from another country, you'll have to figure this out for your own. If you're planning to invest in equities or listed bonds or ETFs, you'll need three types of accounts. A bank account. This is your normal savings account where you keep your money. Second is a demat account. A demat account is similar to a bank account but holds different stocks and bonds instead of cash. You can open this account with a bank or with a stockbroker. In either case, the custodians of your accounts are NSDL or CSDL, which are the only recognized custodians in India. So there's no need to worry about the safety of your stocks lying in your demat account. The third type of account you need is a trading account. Even if you have both a bank account and a demat account, you cannot trade on the stock market unless you have a trading account with a stockbroker. A trading account serves the minimal purpose of holding your cash and stocks temporarily when you place an order to buy or sell. This account is what is opened when you register with a stockbroker. There are several banks that offer 3-in-1 accounts. In this case, all three accounts are linked in such a way that you do not need to write checks or demat slips as it happens online. These accounts will be of help only if you are buying stocks or bonds that are already listed on an exchange. But if you wish to buy stocks or bonds from a company during a public issue, you will need to fill out physical forms and give them to your broker. There is a facility called ASBA, ASBA, under which you can apply for public issues directly through online banking channels. Investing in insurance or mutual funds is mostly done through agents who specifically sell these products. Most banks also sell these products through their personal banking relationship managers. Of late, some types of insurance and some mutual funds are available for purchase online. But the online channel is still at a very nascent stage and one still needs to sign a form and submit it within a reasonable time frame. Insurance policies and mutual fund units are held only in the records of the company that you're invested in, and there is no custodian that holds your units, unlike in the case of stocks. Thus, it is very important to preserve a physical soft copy of your mutual fund statement and your insurance policies. With this, I bring this lecture series to an end. Hope this has proved helpful. Please feel free to share any suggestions or feedback. Happy investing!